All right, so you're starting a business here in New Zealand. First off, congratulations. Now, one of the first big three-letter acronyms you're going to run into is GST. So today, we're going to break down exactly what that means, figure out if you need to register, and then walk through how to do it.
It's a super exciting time, right? It's full of possibilities, but let's be honest, it's also full of a fair bit of paperwork. But you know what? Getting your tax stuff sorted out from day one is genuinely one of the smartest things you can do.
And that's exactly what we're going to do. Our goal here is to just cut through all the confusing jargon and give you a really clear, simple guide so you can move forward. So, let's dive in.
Here's a quick look at our game plan. We'll start with the absolute basics of GST. Then we'll get into the big one, should you register or not? After that, we'll look at the critical decisions you have to make before you even start the process, run through the actual checklist, and then wrap up with what happens once you are officially registered.
Okay, first things first, let's make sure we're all on the same page here. What exactly is this 15% tax we're all talking about?
When you boil it right down, it's actually pretty simple. GST is just a 15% tax that gets added to the price of most things sold by businesses that are registered for it. It's what they call a consumption tax, which really just means the person who ends up buying the product or service is the one who pays it.
Now, this is the really important part for you as a business owner. You basically become a kind of collection agent for the government. You charge GST on everything you sell, and you hang on to that money for them. But, and this is a big but, you also get to claim back the GST you paid on your own business expenses. The difference between what you've collected and what you've paid is what you either send to Inland Revenue or, sometimes, get back as a refund.
So that leads us to probably the most important question for any new business owner. Do you actually have to register for GST? Let's figure it out.
Before we even think about money or numbers, you've got to answer this one fundamental question. In the eyes of the IRD, is what you're doing considered a taxable activity? So, here's the key idea. If you're regularly, continuously, providing goods or services to other people in exchange for payment, that's a taxable activity. This is the official line that separates a real business from, say, a hobby or just selling some old stuff on TradeMe. Okay, so if you ticked a box and said, yep, I'm running a taxable activity, then the very next question is all about your turnover. This is the number one thing that decides whether registering is your choice or a legal requirement.
And this is it. This is the magic number, $60,000. This is the threshold, the line in the sand that separates voluntary registration from mandatory registration.
So here's how it works. You've got to look back and you've got to look forward. If your total income, and that's before you take out any expenses, was more than 60 grand over the last 12 months, you have to register. Period. And the same thing applies if you're looking ahead and you're pretty confident you're going to cross that $60,000 line in the next 12 months.
But what if you're under that 60K mark? Well, now things get interesting. You've got a choice. You can register voluntarily. The huge advantage? You get to claim back the GST on all your business expenses, your laptop, your phone bill, your software, all of it. The catch? Well, you have to start adding 15% to your prices, and you're signing up for regular paperwork. It's a real balancing act, between improving your cash flow and potentially making your prices less competitive.
Okay, so you've made the call. You're done register. Fantastic. But wait, before you jump online and start filling out forms, there are two really important decisions you need to make that are going to shape how you manage your money from here on out.
First up is what's called your accounting basis. It sounds technical, but just think of it like this. Are you going to manage your GST based on the cash you actually have in the bank right now, or based on the money that's written down on invoices you've sent? It's a huge deal for your cash flow.
So, you have three options, but for most new businesses, it really just comes down to two. The payments basis is usually the simplest for your cash flow because you only pay GST to the IOD on money you've actually received. Simple. On the other hand, with the invoice basis, you have to account for GST the second you send an invoice, which means you could end up paying tax to the government before your client has even paid you.
And if you're wondering what other people do, well, the numbers here tell a pretty clear story. A massive 78% of businesses choose the payments basis. That's a huge clue that for most startups and small businesses, protecting your cash flow is absolutely king. It just makes sense to line up your tax payments with the money that's actually in your account. All right, your second big decision is about your filing frequency. This is all about how often you're going to sit down, do your sums, and file a GST return with Inland Revenue. Your turnover helps decide what your options are. If you're starting out and don't have a ton of transactions, filing every 6 months might sound easy, but just be ready for a pretty big admin job twice a year.
The standard option, and usually the most manageable, is 2 monthly. But if you're a business that expects to get regular GST refunds, filing monthly is the way to go because it gets that cash back in your pocket much faster.
All right, you've made your big decisions. Now for the practical part, actually getting registered. And the good news is it's a pretty straightforward online process these days.
The whole thing really just boils down to these 3 steps. 1, make sure your business has its own IRD number. 2, have those key decisions we just talked about locked in, your accounting basis and your filing frequency. And finally, you just log into your MyIR account and follow the instructions to register online.
And hey, here's a little pro tip to make it go even faster. Get all this info ready before you even log in. Have your IRD number, your business bank account number, your turnover numbers from the last year and what you expect for the next year, and something called your BIC code, which you can easily look up online. Have that stuff handy and you'll fly through the registration.
So you click Submit, and that's it. You are officially GST registered. Congratulations! But just remember, registration isn't really the finish line. It's the starting line for some new, ongoing responsibilities. From your registration date forward, you have to charge that 15% GST. You've got to file your returns on time every single time, and of course, pay what you owe. Keeping really good, accurate records of all your sales and expenses is now non-negotiable. And finally, if you ever wind down the business, you need to remember to go back and deregister. So there you have it, a complete roadmap for figuring out GST registration. We've broken down the rules, we've walked through the key decisions, so now the question isn't just if you should register, but how registering, or maybe choosing not to, is going to shape the financial journey of your business right from day one. What path are you going to take?